Welcome to this week's, I was going to say this week's hyperinflation, this week's webinar where we're talking about hyperinflationary depression simplified. So today I've got lots of cool things to talk about. Some things that might seem a little bit cuckoo to some of you, but these things I've been talking about for about 5 or 6 years, going back a few years ago. What I was saying sounded very weird, very odd, very strange, but it's sort of coming into fruition. And I think it's very important for us to look at this, because at the moment we're hearing about inflation, we're hearing about interest rates going up, we're hearing about lots of things happening out there in the world, and it may seem, what is happening and where are we all heading? So that's what tonight's all about. And as always, before I get started, just want to make sure all of you guys can hear me. So if you can hear me, just flick me a little message in the comment section. If you've got any questions, write them in there along the night. And I'm just a dude, crazy dude on the internet, talking about different things that are happening out there that I see, unfolding and unraveling. None of this is financial advice. I'm not your financial advisor. Be careful when you do speak to financial advisors, because there's few and far in between that are very good. So a lot of them don't even know how this sort of stuff works. So with it, I'm going to hop straight into it and go through our agenda for the evening. So I want to talk about what's happening in the current economic market. What is the GFD? How did we get here? I want to talk about understanding the monetary system and why we're living through a hyperinflationary depression, and how to protect yourself and what the opportunity is. I've got a few things, there are extra slides that are put in there about what will happen in 12 months, what will happen in 2 years. So some of these things are predictions. So I'm not here to say that I am 100% right, because I'm not always 100% right, but this is where I feel we are heading. This is where I feel that we are traveling, and we've got to admit, it is a really weird world that we're living in, and I want to back that up with a lot of data that I'll share with you this evening. So I guess, looking at what's happening out there in the current market, we're seeing interest rate rising everywhere, which I find quite amusing, because they're saying that we've got high inflation, but what are they doing? They're increasing interest rates, which is creating more inflation because more people are passing that on. However, something's got to give, and that what's got to give is we're going to go into a recession. So I believe that we are heading into a recession. They're saying that everything's great and everything's doing great, but I haven't heard one person say that they're killing it at the moment. For me, I'm very excited by it. It's not that I'm sadistic and I'm thinking evil things or whatever. It's that I see the opportunity, I see the writing on the wall, I have very clear understanding of the data and how it's working, and I make educated decisions which are calculated based on the information that I'm processing, rather than listening into a rhetoric that's being put out through a propaganda outlet. And just go to think about this, right? Your trusted officials said that you wouldn't see an interest rate rise to 2024. We've seen 2,000% increase in interest rates so far this year. When you think about it, it used to be 10 basis points, and now it's 185 basis points. So it's really gone up 1,850%, or 18.5 times from the bonds that are being sold. And I'll jump into those things very shortly. I've got a lot of charts, and these charts come from a very trusted and respectable organisation, which is the Reserve Bank of Australia. There's a lot of tongue-in-cheek with that, because they're not really respectable, and they're probably one of the most evil organisations out there, but I don't want to digress. So what we're seeing at the moment is what we've seen for the last few years is quantitative easing, where they've been printing lots of money, they've been doing lots of stimulus packages, they've been doing lots of government programs and all these sort of things. What we're seeing at the moment is a convergence, which this is getting out of control. The money printing is getting out of control, and they are now trying to remove those stimulus checks that they've put out there. They're trying to remove the cheap credit, which is causing unrest, it's causing people to be scared, it's causing a recession. And I believe that we're going to head into a recession. A recession is 2 quarters of negative GDP, which is gross domestic profit, or whatever you want to call it. And a depression would be 4 negative quarters. So being a recession that lasts for a year or longer is depression. I think that we are It's very rare to see something like this, which we will see shortly. I've talked about hyperinflation for a very long time. I got laughed at to start off with, but now it's becoming a questionable thing, which is real out there in the market, which we'll get into that a little bit later. I guess what we're seeing at the moment is that they're trying to stop the market from going into heavy levels of inflation by taking away all the money that they've printed. They're trying to take away all the stimulus packages. What they're doing at the moment is like driving in your car in winter and turning the aircon on, or driving in your car in summer and turning the heater on. It's really going to have a negative impact. You'd rather not have it on at all. So that is the sort of market that we're heading into. The last 3 years of the market was fake. The previous 8 or 9 years before that was fake. The whole system is fake. And I'm going to run through some stats. So buckle yourselves in, grab a stiff drink, and check out the stats. So this here is from the RBA. This here is a chart from this millennium. It's 20 years ago, or whatever it is, to about 2022. And this is the GDP across, the rest of the world, and Australia and US and Japan and all these different countries. So let's have a look at those charts. And I'm just going to break it down to the dumbest and simplistic way of looking at it, because that's how I look at things. I go like, what looks like an inconsistency here? If that was a straight line, you'd be like, okay, it's a straight line, but it's not. You see it drop off here. So what happened in 2008, 2009, 2010? What happened here? This was the GFC. So we go, okay, it was traveling okay, and then we saw it drop off, and then we saw it take off. What caused that to happen? Well, we know that that was a recession. And then we go to this one here, which I find quite amusing, because we saw this drop off. This didn't drop off. This was probably about February 2020, but there was a lot of stimulus packages happening here. How come when you see this, this was like straight off a cliff, right? You can see that was straight down. This one was like, are we going to die or not? And then it goes, ooh, we're going to die, right? The system was dead at this point. This was going back in 2019. But we saw everything go negative, right? So if we look at GDP here, which was 2.5% negative in the GFC, we went below -5 in 2020 and start of 2020. And then we shot off and we went to +10. It's never been +10 beforehand. And then it's come down to this level, and it's, it's sitting around the 5, which is where it was. Will that continue? What will happen after that? And we go and have a look at these different countries around here. So this is a chart, just warming up. We're going to get into it, but there's lots of interesting things that we can see here. So looking at inflation, right? So if we go through, it's getting pretty warm in here. I need to message someone to try and turn the heater off. It's getting a bit warm. It's heating up just like that example I was talking about beforehand. So looking here, we have inflation through the advanced economies. US sits at about 2.5%, 3.5%, goes up, down, sideways. Then we look at, when it crashed in the GFC, it went negative, and then suddenly it came back up, and it hangs around these sort of levels. But what happened here, right? We didn't even see a recession, right? This is the US, the Euro, Japan, India, China, different countries around the world with their advanced economies. So we go and look here. Why do we see Euro and that take off? Like this is 2022, this is 2018, so this is about 2020. Why did we start seeing this happen? And that was because of money printing and stimulus packages. We've got labor markets, right? The US here, we go to 2018, 19, 20, bang, goes up. Interesting to look at their charts, right? These can be given as pretty boring things. Then we have a look here at some charts, and we've got Australian growth, we've got GDP, which is, sitting here at 4%. And then when it goes down negative here, it's been negative in the GFC, it's been negative here, it's been negative when September 11 happened. So we can see the inconsistencies. When did it go negative, right? We have a look at contributions, right? So if we have a look at GDP here, what is it made up of? We're at 3 points here. So we've got consumption of goods, we've got dwelling investment, so it's negative for dwelling investment. We've got mining investment, which is basically nothing. We've got non-mining investment. Look at this, we've got lots of government investment. We've got exports and we've got imports. So they're all negative apart from these areas, which is pretty interesting because that indicates to me a lot of commie programs that are going on. So then we go back to these charts, right? Mining and non-mining activity. So we've got mining investment and we've got resource exports. We're at negative for the exports, right? When was the last time it had negative, right? Where did we go? We had the GFC, we had certain things that occurred. And then we have a look at these charts. It's not all these are really relevant and there's a fair few of them for me to get through. So if we look at CPI, which is, I call it the CP lie because they're lying about inflation. They say that inflation is only 2% or whatever the case may be. The reality of it is that nothing has gone up less than 4%. They say that things went up by 4%. What about your electricity bill that's gone up by 20% this year alone? And it's just in one hike. So these are all a lie. But it's interesting to see that it went negative there. It went negative around the GFC. And then it looks like it's going up. But measures of underlying inflation, and they put all these things that people don't really get in there. So here we've got household income and consumption. So we've got consumption at 8%. We've got negative 8% here. We've got the saving ratio. They say that, that looks like an inversion of each other. We've got consumer sentiment, which is here. This is a very important one, right? The consumer sentiment here has gone under 100 in the GFC, and then it sort of went back up. And what happened here? They put interest rates up, right? So we know, okay, if we overlaid the interest rates and saw that in 2010 they went up, 2009 they went up, that's when interest rates went up. And then when they went up, it fell again. And then they lowered them, went up, then they had to lower them again, and they had to do certain things to keep the ship afloat. And it's been bouncing along, pretty smoothly there at 100 until we got to 2019, and then to 2020 it dropped. That to do certain things to push the consumer sentiment up. So they've given all these printing of the currencies. And here we are at the start of 22, and I find it very interesting that now they're taking away all the things that fixed consumer sentiment, and we're seeing this drop, right? So consumers don't have confidence to go and buy products, don't have confidence to go and buy cars, whatever the case may be. So it's falling quite at a negative rate here. So we're almost at the level of the GFC again, the start of Corona, and we have nothing going on, right? So just be very conscious of that, because there's an example for each and every one of these movements to happen across the years. But we can see here's when Corona came and all that, but this has just fallen off a cliff at the start of this year. Why did that occur, and what are they going to do? If that sits below, right, if that doesn't get fixed very soon and they don't do something to do that, that'll be the only abnormality throughout this chart. It's important to look at this data for what it is. So we've got private dwelling investment, that's here, detached houses, all that, who cares? Housing prices and household debt. So you can see the house prices keep rising, right? And we think, well, what happened for this to rise, right? We see the debt is increasing. We're seeing net wealth, blah, blah, all those sort of things that are happening here. So you've got owner occupier, you've got investors. So there's actually a lot less investors out there in the market than what there is home owners. This is very important, right? So when we look here at where debt is being spent, right? Where is debt being spent? Everyone thinks, oh, it's the real estate market, right? It's the real estate market. Here is the buildings, here is engineering, and here is machinery and equipment. So they need to keep pushing up at this end, whatever they can to make the GDP numbers higher. So they've got the mining boom crashing, so then they try and increase it with different sorts of incentives, right? Here, if we look at buildings, it dropped off in the recession we had to have. It did nothing in the 90s. They tried to boost it up. Early 2000s came, that to boost it up. So they started first homeowner grants and all those sorts of things that occurred there. GFC came, it fell down, and then they did other programs to try and boost it up. It's actually at a pretty low point right about now, and that's including the whole boom that we've just seen. So it's interesting to see that these are all at a pretty low sort of level as it is. This one here is very, very crucial, right? Because I keep saying to you guys, you can look at, you know, all the debt that is involved around the property, right? Everyone's worried, oh, my interest rate's gone up from 3% to 5% or 2.5% to 4.5%. Like 4.5% is pretty decent still, but anyway, the bigger problem that we're going to see here is that we have got secured and unsecured debt. This is in the billions here, right? So just think about this. This is new debt that has been taken out for businesses, right? So we have here a figure of unsecured and secured here of a medium business, so small business, medium business, large business. So we've got about $600 billion worth of debt that's attached in large business. And I'm assuming, yeah, I don't actually get if that's plus or if that's just a percentage of it. I'm assuming that's just a percentage of it. Well, we've got the debt here, $600 billion. There's the billion, there's the 600, that's $600 billion. This is 2020, this is 2022. You can see it has risen. Now we can see here that medium business, it has risen. We've got small businesses which are folding, right? So bigger businesses are getting bigger, smaller businesses getting smaller. 150 billion, 300 billion, so it's 450 billion, 600 billion, that's about $1 trillion worth of debt. That's just some debts that they've accumulated, right, and put together. So my question is that we've got these businesses that have got a tough time at the moment. They've got rising goods, rising staff costs, rising inventory. They can't put their prices up. Now we've got the cost of that debt is going up. All this debt is going up in value and it's costing more and more for them to hold. What eventually is going to occur, we're going to see a massive recession from it because these businesses will start going bankrupt. Anyway, that's just, you know, my thoughts on that, right? So when you think about your mortgage going up, how many people have a mortgage, how much debt is out there, how much debt is in these businesses and corporations? That's the bigger problem that you should be focusing on. This one here is very important, and I want you guys to understand this, you know, very carefully, right? So we have here credit that's being created and broad money supply. So we have a look here. The more credit that's being created, the more broad money or less, and the less that's there. So if we went negative, so there was nothing being created at that point, it fell off a cliff because that's when the liquidity dried up, right? That's when the liquidity dried up. So this is something that you guys should be very aware of and be very concerned about looking forward. So, and this is why I say that the whole last 2 years of Corona was a scam, right? Because they had to mop up and blame something for the cause of something, right? So I know there's a few people that have had their boosters that are very angry at me for saying it's a scam. Let's all just respect ourselves, and you know, I respect everyone and their decisions, but my view on it is not taking the piss out of that there isn't an illness or an illness. I've had it, my family's had it, everyone's had it, and I'm still here, right? I'm still alive, but whatever it is, I want to go back a few steps, right? So when we saw the crash occurred in 2018, 2019 here, right? That's when I started talking about the global financial depression, the GFD that's occurring, which is a depression that we would see. This here occurred in 2008 when we saw all the credit dry up. The credit dried up and the banks went broke in 2018 and 2019, and that's where we ended up here. When this credit started flowing again, you could see it actually stopped in 2016. It started going backwards, and that meant that there was less money out there in the system and it was sort of skewed a bit. But it fell off a cliff 2016, 17 and 18. That's when they put in APRA and the Royal Commission and all those sort of things. But what I find interesting is that it took off, right? They started turning on the printers, and it literally, you can't really see any other points. You see this point here, which is just pre-GFC, and you see this point here, and we've got it falling off a cliff, right? Why did it fall off a cliff? Because they turned the printer off. We don't see the money printing. We've got the credit here, which is now you can start seeing it flat, but it will be interesting to look back on this chart. And this is available in their slide presentation every month at the RBA when they do the rate meetings in the RBA in the city. So that's very important to see where the money is growing. When you have expansion of money, so we look here, what happened in the GFC, right? We saw this big boom, and then in about 2004, the property market crashed because they weren't printing money anymore. And then in the GFC happened, it really crashed, but they turned on the money printers and they cranked it back up again, and we started seeing the boom that we saw beforehand. We didn't see them turning on the money printers, we saw it crash, and now we're seeing the money printer turn on, and now they've turned off the printer. But this time it's very, very different. So if we have a look here at the currency that's out there, you've got the currency that's floating around, you've got M3, you've got M1, you've got different money supplies that are out there, which is, I won't go into each and every single one of them to bore you guys, but this is money that's being printed. So the amount of money printing that has occurred when the GFC occurred, bang, 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 printed heaps of money, right? This here, if we look at the currency that's floating around, they printed lots of money and it fell down, but we did see a boom that occurred after that. This time it was even greater. Just interesting to see these charts that are out there. Credit growth by sector. This one's a very cool one to look at, because if we overlay this, we can sort of see what happened with businesses and housing and all that sort of stuff. So housing was massive up until the GFC. It fell, and then it fell, and then it fell. But we did see a boom during that time. Business off a cliff, a personal off a cliff. But the levels here, right, as pre-GFC, the housing market cooled before the GFC occurred. But business just kept going up until the GFC. You can see that this point is off a cliff. That's when the crunch moment was in 2009, or 2008, 2009. If we have a look here, we can see that it went straight up, and that was because of the printing in 2020. But if we look at it, we've got much more money that's being, like credit, and loans and debt that's being generated from businesses, and it's not from personal, and it's not from housing, right? It's only been a couple of times, which is around the GFC point, where business had more debt growth than what property did. And here we are at a point now, everyone's worried about the housing market. I'm telling you, I'd be much more concerned about the business sort of sector, because there's a lot more debt in there and it will become a lot more expensive. These ones here are pretty fun. This one here is the state budget balances, percent of nominal GDP. And we can see certain things here, right? We had, most people would sit here and say, oh, well, John Howard was here, so we ran into a good period of time, right? We had the Liberal Party in, right? which is funny, because I grew up in that household. I grew up in there. We see here that we had the recession that we had to have, and certain things that had occurred, but we had, debt growing at really large rates. So then we look here, what happened after the GFC? The only way for us to get out of the GFC was for us to print lots of money. And the states took on debt and loaded up their balance sheets with debt in order to prop up the economy. So the debt was bought up, and then the economy. But if you noticed at these later parts that there's more and more and more debt growing on those balance sheets, and it's at a point where they're drowning this debt and they can't reverse it. So the problem that we see now is that they've taken on all this debt and it's growing every single year, and the more debt that they're taking on, what happens when you add more value to it? The higher cost of that debt, it means that it's going to put the states and the governments and all those places into a big problem. So if we have a look here at the budget, we're here at the moment, and they go, okay, we've got the positive here, right, which is in 89 to 90, and then it went to a big crash, right? So when it crashed, it went negative because they had to go and print their way through the recession that they had. And then we went through all those great years, right? And then the GFC hit, and they had to print their way through that recession. And then we had the alleged virus that happened, and then they printed their way through it. I find it interesting that, you know, we see glitches, sort of like glitches here in the system. Here we are. This is what their forecast is for the budget not to be that, you know, that much of a loss, but it's still going to be in a big loss. And this doesn't mean that the budget gets back to zero at this point. It just means that they stop printing and they're printing less and less money. So they're forecasting that they're going to be printing lots less money. But what's that going to be happening? We're going into a recession, and they're going to take all of the things that kept the market alive. It's not going to work. This bubble is getting bigger and bigger and bigger. So having a look at the taxation revenue growth, we look here, you know, everyone went in a recession. There was not much taxes being paid. We saw good times. We saw, you know, more taxes being paid. We saw it start going bad. Then less taxes were being paid. They print all this money. Everyone's paying taxes. What happens when we go into recessions, right? No taxes are being paid. So they need to get the taxes back in for the government to be able to be liquid and not insolvent. So they have to then print more money and create a bigger, faker environment for everyone to play in. So just sharing my view of what I see here. These ones are interesting. We look at the commodities markets, and 1992, you know, this is just the indexes that they work on. We saw the mining boom, which occurred. What did we see? We saw commodity prices rise. So we created a mining boom to get ourselves in trouble. We had a little glitch there. Then, you know, everyone still needed steel and all that. And then the mining boom stopped. No one wanted it. But what's happened now is we're seeing mining increase, but that's actually at a higher rate than we've ever seen beforehand. So it just goes to show that there's some opportunities out there in certain different markets. So we've got here oil and gas prices that are being, you know, here we are in the mining boom, and they're at this level, down, sort of back up. If we look at iron ore, thermal coal, or coking coal, so iron ore, steel, it went down and it's gone back up, it's gone down. It's traveling pretty well. We've got average Australian export price, which I think is this blue line. Yeah, the blue line is what we sell at. The orange line is where the market spot price is at. So we've got here thermal coal, and everyone says, oh no, we can't use coal anymore. Why are they saying no, we can't use coal and they want alternatives? I find it interesting because it's becoming too expensive for them to do. So we've got real money, which is commodities, which could be gold, could be silver, could be any other sort of commodity that you consume. It's just not limited to gold and silver. If you go and trade coal, you're not going to have a big farm full of coal and say this is an asset, because no one's going to buy it from you. So it's just not as good as, you know, using as a means to trade and operate in. But anyway, we have a look here, and the actual spot price has gone through the roof for coal. So what happens when coal goes through the roof? Let's just think about this, right? Coal is trading here, and now it is up over 500, 1,000, wherever it is per ton. So at $100 a ton, or whatever it was trading at beforehand, it is, you know, pretty, you know, standard and in line with where the market's at. We see these things happen here. We see, you know, prices of electricity go up. We have a look here. What happens to your electricity price when the coal price to run the power station goes through the roof? We end up with higher power prices, and we end up with that being transferred into higher fuel prices, and so on and so forth. We've got coke coal, which is a different type of coal, and that's used to make things like steel. So it's a part of, you know, industrial refining and all that sort of stuff. So in the mining boom, it was up here, and then it crashed, right? So wow, the market crashed. We had a mining boom and things crashed and went down to a low point. It caught back up a little bit, then it crashed. But then we look at it now, it's higher than what it has ever been. They're all at an all-time high. And this is an inflation on commodities, and no one wants to. Why is that occurring? It's because if you have no value in the currency, because it's just a wash of cheap, easy, dirty money that's out there, you don't want to take money for your asset. So that's why you would expect more money for something. It's like, I went to get dinner tonight before our webinar, and I had Japanese, which is pretty good. I like it from around the area. And I looked at it, it was like 48 bucks for fucking Japanese food, right? It comes in a bag and it's got some timber chopsticks with it, and it's great food. But I'm like, that seems pretty expensive. But that's the price that they choose to sell it at, because that's what they need to get to run their business. And, you know, I find, you know, these guys would be, you know, they're not trying to give you a silver spoon, and it's not a fine dining restaurant. It's just average, right? Whether you go to Macca's or wherever, everything is going up. People don't want to trade their goods, their services, time, their energy for money, because they're seeing that it doesn't buy them much. So that's what's causing high levels of inflation. And all these things sort of add up, and they try and, you know, give you these very, oh, ooh, I'm like some, you know, labeled economist, to give you their view, and you just get programmed by it from the TV and all that. So if we have a look at exports here, we can see who's been exporting, you know, minerals, who's been buying our minerals. Sorry, we've got Japan. That's, here we go, Japanese food, Japanese now. China's been buying a lot of our stuff, and they continue to have to be doing that. This here is out of the newest RBA meeting. And I find it interesting that they don't have it here anymore. Just, you know, interesting to look at. Resource exports, we look here, we're sending off more coal than we have. We're sending off more iron ore than we have. We're sending off more gas than we have. Interesting observations. Net capital inflows. So we look at the debt and we look at the equity. We look at the timing of where things have been at. So we've got some equity over here, but we look at debt. We've never seen the debt in negative as we have seen in previous years. And I find this quite interesting, because everyone's saying that this all happened because some Chinese bloke ate a bat in a wet market and we all got sick. But why did all these financial things happen in 2019? Why do we start seeing rates drop in 2019? I just find it interesting. It's like they've mopped the floor with this thing, right? They've printed their money, they've done what they need to do. This here is important, I believe. We can see here the RBA liabilities, which is, if we look at each year, it's been 200 billion, goes up a little bit, and it's progressively getting higher, right? And we never see it go back down. So what is in their liability? So they've got capital and reserve bank fund reserve. They've got bank notes that are out there, so that's the level of bank notes. Exchange settlement balances, which is this green one, which has just been printed. You can see this is 2020, 2020-21. This is 2019. It's just taken off. We've got government and other deposits, and, you know, basically they've all been printed. We can see it's gone up triple. The amount of liabilities has tripled over this period of time. Then we go to the RBA assets, right? Now we've got repos. So we talk about the repo market, which is what imploded back in September 2019, which is basically the banks have gone broke. This is very crucial, right? So we've got the open repo. So the light green one here is the open repo and other assets. So this is the assets, is basically the loans, the bonds that they've got out there that they've, you know, thrown in the markets. These are money that they've printed out of thin air, that they've made from nothing. We've got the open repo market, which is the light green. We've got the dark green, which is the OMO repo, open market operations, I think it is. And then, so we see here, and there's no real blue, right? The blue, which is the term funding facility, happens in 2019 to 2020, which is when the market started to fall apart. And then we've got the domestic bonds, which have printed a lot more bonds, which bonds are basically a loan of an IOU. And then we've got the blue one, right? So the blue one's the term funding facility. We've got the domestic bonds, and we've got the gold and foreign exchange. So if we bring that back down, there's actually less gold on the books, right? There's less gold, there's less real minerals, but they've made it up of a lot of bullshit loans. They've just printed money out of thin air. They took away the repo market and they've turned it into new financial instruments, and that is a central bank. These guys that put out these reports is the RBA, which is the Reserve Bank of Australia. It is not the Australian government. If you notice on the website, it has copyright on it. It does not share the crest, the coat of arms of Australia. If you go to the health or the any sort of government website, you would find a crest, a coat of arms, and all that. On the RBA website, it looks like Satan's head as their logo. Just go check it out. It actually scares you. And go check out all the other websites. And you go into the About Us section, it says, the Reserve Bank of Australia reports to the Australian government and its agencies. So let's just take that back a little bit, because these things will be written by lawyers and stuff like that. So if I am, let's just say that again, right? The Reserve Bank of Australia reports to the Australian government and its agencies. So I am Nathan, right? So it would be like saying I report to Nathan, right? And its agencies. It's reporting to the Australian government, right? And its agency. It means it's not the Australian government and it's not its agencies. These are privately owned banks, right? So be very careful. Go and look at the website and look at any other government website. They are different websites. They are different entities. But they're the ones bringing this out. They give you all the advice, the guidance, the lending and all that. But you can see that their actions, what is the cause of the actions? If I go out and get smashed tonight at the pub, that's an action that I choose to go and do. If I do that every day, then it's going to cause a downward spiral and things will happen bad to Nathan. If I go and eat Macca's every day, I'm going to be ballooned out and it's going to cause a negative action. So the habits and the actions, you can see that the actions that you take are going to cause a certain thing. These actions that the central bank is causing certain things to happen. Question I ask is, who is taking out the bonds? Who is taking out the short-term funding facilities? And this is liquidity here that's keeping the banks alive. If they rip this out, you can see here, I'm just having a look. I'm trying to get what that one is, but it's I think it's quarterly. It's blown. Yeah, it's weekly. There we go. It's weekly. You can see that the chart is, telling a story, right? You can see here that the repo market has been deleted. Basically, the two repo markets have been deleted. As that happens, all the term funding facilities have fallen down. So it would be very interesting to see. You can see here that domestic bonds, the bonds have started to disappear. As they're removing the bonds out, that is taking liquidity out of the system that we're using. So all interesting things to have a look at. Keep the questions and comments coming through, guys. I'll get to them shortly. But it's interesting when you look at the cash rate and the 90-day bill yield. So this is the 90-day funding, which is where you can sort of predict where the cash rate is. So that's why I always revert back to those charts, the blue and white charts. This is a different format of it. So you can see the cash rate target, which is the red, with a 90-day bill yield. So they run in sync with each other. So you can sort of overlay the two and go, okay, this is where the funding's going. Is it going up, down, or sideways? But then when you look at the real cash rate here, you can see this blue line. And I was told, right, and I have smart asses that come out to me and say, Nathan, the interest rates didn't go negative, right? Interest rates should have gone negative, right? And have you noticed here that the cash rate and the actual interest rates that we are seeing, right, are going up right now, but we are seeing this line, which is the blue line, which is the real cash rate, is going negative, right? It's because they've got an off, they have got different markets that are happening here. You can see the trend line, right? So if we see where the real cash rate is versus the cash rate targets and the 90-day bonds, we can see that they sort of sit in step with each other here. And these ones sit here sort of underneath, right? And I find this one very fascinating. This is very, very fascinating. So we have the blue line, which, you know, this goes up, this goes up, this goes down, this goes down, they all go up. But it was here in 2019 when the whole system blew apart, which this is just going down, this is going up. They are trying to pretend that they can do something, but they can't do anything about this. Interest rates will come down. If we have a look at each country around the world, this is their interest rates. It's kind of funny because they go, oh, you know, it's Japan, it's China, it's fucking, you know, Russia, it's fucking Germany, whoever it is that's doing certain things. The reality is how come every country's interest rates and monetary policies tied together, right? Who is pulling the strings, right? Who controls things, right? Kind of funny I say who, because we've got other entities that are out there, right? You've got your World Health Organizations, you've got your World Economic Forums, you've got all these sort of guys and the people that shake hands with them and sit at their tables that, you know, yeah, a lot of it sounds like conspiracy stuff out there, but this is actual facts, right? This is from the RBA websites. You can't make this shit up. They do, but in their reports, you can find the hints that are here. So we can go over here to this one here, Australian non-financial corporate bond yields, right? So these are corporate bonds. So we've got them down here at almost nothing, and they've just gone straight up, right? Straight up, we're back to 2010 levels, right? So what's going to happen to business? That's the question that I ask. I don't give a fuck about the property market, right? My concern is with the businesses out there, and it's going to cause a flow-on effect. And I'll explain what I see happening very shortly to you guys. So this one here is very interesting. We have here the spread between the Australian 10-year bond and the cash rate target. So we've got here a couple of times which it has gone below the line, which has been a negative spread, which is a yield curve inversion. And then we've got here where it's gone up. That there is started to fall backwards here. If you notice, it goes up and then it starts coming down, up, down, up, down, up, down. This here's gone up very high, which, you know, indicates we're out here. Will be very interesting to see where things start to head on that one. This one here, if we overlap the stock market, right? So if we look at the indices out there, and we start looking at the stock markets, look at the S&P, the ASX. So we had the market go up, .com, bang, and we saw, you know, certain things that happen around the world. 3 towers that fell down to the ground and burnt from allegedly certain things that occurred, and we saw, you know, certain things happen to the stock market. If we look here, we have the GFC occurred, bang, down, and then it just keeps going up, right? These things keep going up, but then we see here, bang, crash, and then we see it going up. But what we haven't seen, if we overlay this data, right, the GFC occurred when interest rates went up and certain things that occurred, that's when the market crashed at that point. What is going to happen to these companies, right? They are filled with corporate bonds, they're filled with debt, they're littered with all this debt. It's going to be very, get your popcorn out, right? I see some big issues that are going to be occurring, and I'll throw that out there at the moment. And this is no financial advice. You need to go get some good advice and make some educated decisions on this, or you can just sit there and just enjoy the ride and, you know, scratch your head and just be, you know, in with the rest of the Matrix show. But if you have shares, be very conscious of what could happen in the stock market. If you have a super fund, which most of you guys would have a super fund, I would be considering what is the issue that could occur inside the super fund. How can you protect yourself? What sort of things you can do to capitalize on these things occurring. So that's a very volatile market because they are paper markets. Bonds on issue in Australia. This one here is probably one of the most important slides that you are going to see tonight, and you should understand it pretty well. So if we look here at the bonds, we've got the Australian government, we've got the state government, and we've got non-government bonds that are here, right? I find it interesting that these non-government ones just went, you know, pushed up, which is, you know, banks and different things like that. So in 1992, they were down. We've seen a bubble that got created. So we've got here this part here, which is just pre the .com bubble. And then we saw the bonds depleted, right? They took away money out of the system, and then we saw what happened when that happened. We saw, you know, a recession that happened in the dot-com bust. The GFC came, and what they did is that they had to print out more bonds to stop that Ponzi scheme from falling apart. So they had to print more money to get us through the GFC. And basically, since 2008, 2009, the way that they got out of mess and out of trouble, because the whole economy and the whole monetary system was dead at that point, they put it on into palliative care and hooked it up to a dialysis machine by printing so much money and putting liquidity into the system. So if we have a look here, we've got bonds just being printed, right? And you look at it, it's just and then we get to, you know, this sort of level here, and they just print a whole pile more, and then they're now tapering off that bonds. So if you noticed, the bonds went up at a certain trajectory, right, which was money being put in the system. They tried to taper back, right? They tried to taper back and not put as much liquidity into the system, and then we had a massive crash, and then they just put a lot more in, and then, you know, things just keep going up, and you wonder why we've got inflation, you wonder why things are going. But if they try to stop the level of debt, the whole deck of cards falls, right, and all the assets off the table, right? We've seen here tonight RBA assets, right? These assets are what keeps their self-liquid. If they want this to keep going up, right, it has to continuously go up for them to have money, right? The amount of debt that they've created is just astonishing, right? But you overlay it, if that system falls apart or goes sideways, the whole thing implodes on itself. So they have to keep printing money at these sort of levels and these sort of trajectories, and it's getting higher and higher, the amount of level that they have to keep printing. So it is a very exciting time, because what they are doing is that they're going to basically put a ceiling here, and that's going to cause a massive recession / depression. No one will have money to spend because no one's getting this free money being printed. Non-performing assets, we look here, 2008 goes up. We've got businesses, yeah. And then we go to what is the GFD. I feel for some reason that I was meant to have, I don't know, I think there was meant to be something else attached to this, right? I don't know why we've got these. Oh, so I was meant to have little notes and stuff that were attached here. So my view on what is the GFD. The GFD I defined about 5 years ago, 6 years ago, in 2017, 2018, I said we're going to see a depression of biblical proportions. That was my words, right? You can go back. I wasn't so forward pushing about this. It was very new for me to talk about stuff like this. I saw it happening. Everyone said on Instagram, on YouTube, get off the drugs, Nathan, you crazy, I'm going to unsubscribe, all that sort of stuff, due to the fact that what it was saying was very out of line. And I said, we'll see a depression of biblical proportions. They've taken away all the money that they were printing. There's one or two things that will happen. We'll see the biggest recession of our life, which would be biggest depression, sorry, which will make 1930s look like, you know, child's play. Or we'll see the biggest boom of our lifetime, which they'll just print lots of money and print their way through it. So they have taken the road of printing their way through this, and we've seen massive inflation. So the only way to stop a depression is to print money. The only way to stop a recession is to print money. And they have shown that over the last 2 years. It's very obvious. The writing is all over the wall. So we are going into a depression because they're taking all that money away from the table. What do they have to do to stop that from occurring? And it's not going to be good for them. It's not going to be good for you. It's not going to be good for me. It is, because if you see the glitches, then you can take advantage of the opportunities that are that are in front of you. But the only way that they've got is to keep printing through this. So I believe that we're going to see a depression, which we're already starting to see the early signs of, right? It's been 4 months and businesses turning to shit. Everyone's doing staff layoffs. It's going to mean that, you know, there'll be job losses, there'll be lots of unemployment, there'll be a lack of spending. We will see everything go down. But then imagine if you've got a business, right? Let's say that, I don't know, you're a car yard, you're a Bunnings, you're a whatever the business that you're in, and you've had to go and buy all these products that are more expensive. you've got less people spending, you've had to pay more for your products, you're not getting them out the door, you're not getting the profit on them. And then you start seeing the cost of it go down, so you have to reprice everything. Someone's going to go bankrupt out of this, right? And that's what we're starting to see at the moment. So I think we're in for quite an interesting period here, and I'm going to get to my predictions in a little bit. But I believe that we're going to see a massive recession, and I think that we're going to see a hyperinflation, right? And I said that we will see. I said that we'd see one of either of those two things, right? Either inflation, we'll see a massive boom, or a massive bust. And these cycles that we're seeing, they used to be, every 5 years, every 10 years, every 8 years. We're going to see these happen in 2 years or 18 months or 12 months. It's going to be, shrink right down. So a hyperinflation is basically when the velocity of money starts kicking in and people have no confidence of the money, and they're going, well, I don't want the money. I'm going to go out and buy something else, and I'd rather go and spend it on, whatever it may be. And the funny thing is they're going to countries. I forget which country it is. It's one of the, maybe it's Turkey. I've seen it recently. Louis Vuitton has closed their doors. A lot of the big the big brand, sought after sort of companies have closed their stores in Turkey because the rate of inflation, it means that they'll buy something, they would sell it, and then they couldn't go rebuy their stock because the money has gone down in value so much. So what you start seeing in a hyperinflation is that no one wants to take the local currency, and it's basically a collapse of the belief system in the government and in your control of your monetary system, because everyone thinks that money is created from the government, which is kind of true because they get the bonds and they take the bonds, and the central bank goes and prints the money, and the central bank says that, okay, you're in debt to us now. So yeah, with it, I see a hyperinflation occurring from the amount of level of debt that's being printed, and what people will lose confidence in the dollar. The depression will come in due to the fact that people are not able to have the quality of life of what they had beforehand. So if you think about it, quality of life 20 years ago, 30 years ago, if you're, I don't know, 20 years old now, I'm getting old, I'm like 37. When I was growing up, all my friends, their mum would stay at home and dad would go to work, and you'd have a car and all these different things. Now the quality of life is that you must have the husband and the wife working, and that's just to pay the mortgage, and they might have to get a second job and all these sorts of things. So the quality of life is becoming less and less for everyone. Imagine when that exacerbates, right? People are going, okay, well, we can't afford the moves, we can't do this, we can't do that. So quality of life goes down, but we've got hyperinflation occurring as well. So that's a real reality that people need to be watching out for. Is it's not a depression, it's not a recession where everything crashes. It is a depression, but you've also got hyperinflation in the mix. Go and research it. I can go through it into detail, but I'd be here all night. We've got a lot more slides for us to go through. So as I said, I see everything blowing up. I see, if we look at the moment, we're starting to see the writing on the wall. Every day you've got a company going broke, you've got staff layoffs. I've seen like 3 articles in the last 2 days about staff layoffs. I've seen like massive amounts of building companies that are going broke. There's a shoe company gone broke. All these companies are blowing up at the moment. So all those people that were, let's say you're a creditor, let's say you were a tradesperson, let's say that you were a supplier, let's say you're a landlord. When the company goes into administration and closes up, those people may get something. They probably won't get anything after everyone's taken all their fees out of it. So those companies which have just everyday people that may have pulled extra equity out of their house to be able to go and do the work, do their job, run their business, they suddenly don't have a business anymore, and they're in the hole for a couple of $100,000 because this business let them down and it's blown up. So businesses blow up, people blow up and go, they don't blow up and wear a backpack. They blow up because they don't have anything, they have no food. This is the typical sort of signs of a depression from beforehand. Homelessness goes up, drugs go up, alcohol goes up, violence goes up, unrest goes up, and all these things, so forth. So they need to try and keep this system alive. If we have deflation, all those things start occurring. So they have to print their way through it, and eventually it'll lead to communism. If to a lot of people, it'd be hard to access food and water. It's becoming harder for people to be able to afford food and afford the basic necessities of life. And there's also a liquidity squeeze being thrown in there. So as I said beforehand, I do feel like it is that you are driving your car in winter and putting your aircon on, because we've got these writing on the wall and they are trying to squeeze that, and the charts and the stats do not add up to the movements that they are making. So just be mindful of that. So I guess the sort of how did it sort of all happen to this? It's not by design, right? And this one's probably a very deep one to go into, and I could sit here for half an hour going through it and give you lots of pointers for conspiracy theories, and they might seem as conspiracy theories, but there's a lot of factual evidence to it. But basically, the whole monetary system is fake, right? Our schooling system is there to, instill into the minds of people. I shared in Birchfeed this morning a link on Instagram, which was about in 1913 that Rothschild had created the schooling system because he said that he wanted to have people that could be workers for the system that he was creating. So we've got a fake system, a fake belief system. People literally stab. Imagine watching the news, right? And you see someone's been rolled and killed for money, right? You didn't know the person, right? People have zero feeling about this money, right? This money, people fight, they kill, they cheat, they rob, whatever other people about, just to get their hands onto that sort of money. It's a belief system that has some value or that has some power because it's options what they can do. So it's a very controlling thing. You control the currency, you control the people, you control the minds, you control the leaders of the world that's out there. So how do we get to a point where we're seeing very high levels of inflation like we are seeing now? How do we get to a point where we're starting to see hyperinflation occur? How do we get to a point where we've got so much debt at levels that have never seen beforehand? It just comes down to the fact that the ruling controllers have printed so much money and they've gained more and more and more control over you and I and everyone else out there in their day-to-day lives. This Ponzi scheme has occurred for over 100 years. I will get into that on my next slide. And the whole Western world and the Western civilization as we know it, and the world that we've been born into, has been built on the belief of currency that we use in the dollar or yen or yuan or whatever, peso, whatever you're looking at, has been built on the belief system that has a level of intrinsic value, and it has to keep increasing and expanding. Otherwise, the whole thing caves in like a deck of cards. They talk about Ponzi scheme. There's no bigger Ponzi scheme than the currency that we use. So that's how it all happens. So understanding, the monetary system and where it all sort of, the timeline. I don't have a timeline here of it. If you want to go and pull some charts, you'll see that certain things have happened throughout history, revolutions that have occurred, changes of guard, changes of, policy, and then we've seen things that have occurred on the back end of that. Keep the questions coming through, Matt. I've seen here someone asked, what are your thoughts on Russia, China, the co-op of new reserve currency? My view on Russia and China is I don't actually believe any of them. I read this article, and this was on news.com the other day, right? This was on news.com. Everyone goes, oh, hail the Queen. She's a lovely old lady. Bless her, cotton socks, right? They believe in the Queen, probably one of the most evil people, but she's just a middle-range peasant in the whole system of, the rulers that are out there, right? The guys that control the banks. There's photos out there of only a Rothschild could push the prince like this, the future king like this, like pushed him in the chest, like, you do what I tell you to do, right? There's photos out there of the ruling powers, but they're very few and far in between of these entities and people. But there was an article on news.com 2 or 3 days ago, and it was about Prince Charles being embarrassed by the fact that he got a $1 million donation from Osama bin Laden's brothers, right? So 2 weeks after September 11, Prince Charles was having dinner with the Bin Laden brothers, right? So they're trying to find Osama Bin Laden all around the world, but you've got the future king sitting there having dinner, and then he cops a donation in his charity of $1 million into his charity. This is on mainstream media news, right? So I know when I go to dinner or I go and shake hands with someone, I think about, do I want to be associated? Do I want your fucking skin touching my skin if you're a thief, or if you're a murderer, if you've got blood on your hands, right? The crowd that you hang out with, right? So if this is the system that we have believed in, right? And you mentioned here beforehand, isn't Albert Sleazy trying to throw RBA head under the bus and blaming them for inflation? He could try to, but he'll cop a big slap in the head for that. So the ones that control the central banks, lobbyist groups, they control our governments, and they're just puppets. They're really low-level peasants. We think they're the top of the food chain, but they're a rat and a peasant for the bitch for the bigger controlling party. So it's just interesting looking and understanding who controls these systems, who controls the buttons that get pushed for the money to be printed, who are the, when you sit there and go, oh, I'm eating my McDonald's, right? Do you think, oh, Ronald McDonald is in on this? Or are you thinking, shit, some money's being given to Warren Buffett, for example, and then he goes on, I'm a little old man, and he eats down his burger and says, I'm 100 years old. It's all because I ate this nice food every day. This guy has a vested interest. Who gave him the money to fill up his war chest to be able to go and buy all those shares? He's just another puppet in that system. So when you really look at the system and break it down, you need to follow the trail of money and where it leads to up the top. So yeah, the monetary system as we know it today started in 1913 with the Federal Reserve. A lot of you guys may understand where this is coming from. There's lots of videos out there about the start of the US dollar, the petrodollar, about the Federal Reserve. Go and research this, right? I don't want to go into this for the rest of the night, but in 1913, there was a meeting. They formed the Federal Reserve. That was, the control and the takeover of governmental money. Then we saw in 1933, after the Great Depression, that we're seeing the comments going through, keep them coming through. Then you see in 1933, there was removal of the gold standard, and sorry, it wasn't the removal, it made gold illegal, right? So it was illegal to hold gold unless it was in jewelry. So all the coins and everything had to be handed back, and it got revalued at that point. So that was another pivotal point. In 1971, they removed the gold standard, and they said, well, look, basically the dollar went bankrupt in 1971. And then Henry Kissinger went over to Saudis and the House of Saud. They created a new Ponzi scheme, which they connected petrol. It's called the petrodollar, which is basically what our currency is based on. That's why there's lots of wars around, who owns the oil fields and all those sort of things. So 1971, the currency changed from there. 2008, GFC happened. We saw what happened since 2008. They've just printed it, put it on overdrive, printing it. But if you had a 10 grand credit card and you couldn't afford that credit card, you could either go bankrupt, or you could just go to the bank and say, hey, give me another 100,000 and we'll be all right. And the bank would go, okay, well, we don't want to go bankrupt, so we'll give you another 100,000. And then you start going another party, another bender, and then you come back and they go, well, we need you to pay up. And you go, well, I can't afford it. It's like, what's the interest bill on it? It's like, okay, it's $20,000 for the interest bill. Well, your last credit card was only $10,000. Now your interest bill is $20,000. Okay, well, I need $1 million credit card. And it goes, okay, well, that's fine. Well, it sounds very, very acceptable. We'll give you a greater credit card. And that credit card just keeps expanding. And that is our currency that we have, to a point where it can never be repaid. It can never be finalized. It can never be, they talk about a reset, right? They talk about, the Great Reset, the World Economic Forum. You've got some guy that looks very evil, the Klaus Schwab. I don't want to go into that too much. But you've got these guys talking and planning for the agenda for the next phase that we're going through a reset, right? So I personally feel that we've come to a certain point and we will be going we're going to lose our currency. We're going to be completely digital. You can't access your money. If the money's always in the bank, it's never yours. You're just merely trading something that's off on a private ledger, which is really what money is at the moment. But you can actually take it out. If they want to say, I don't like you, don't like what you said on that webinar, don't like what you put on your card, don't like what you said on your social media, like an episode of Black Mirror, they could turn you off, take your money, take everything, and say, get fucked, and you're going to be out on the street as a beggar. In the future, that will become more and more of a system, and I think that is where we're heading into. But I just thought, as I'm saying this, I must sound like a very happy guy tonight. Right? Everything I'm saying is miserable, right? But just to put it in the context as to what we are working towards, and I'm alert to it, I'm aware of it, I'm looking at it, I'm understanding it, I want to know about it. Am I happy about it? Probably not. Some things I'm very happy about, but it's the cost of what it is. We can't change it. We're not bigger than this system. This system's been here for hundreds of years, and if not thousands of years before we came into this earth. So we're not going to be able to change it. All we can do is work with the cloth that we've been given to build the coat for us to wear. So that's the importance of understanding how this world, the currency, the monetary system works, because most people sit there going, oh no, interest rates are going to go up, right? If they go up, they go up, right? But what causes them to go up? Where does it hit a pain point where everyone starts falling down and crashing around that? And my personal view, I'm going to get into that in a little bit later, actually. But my main point here is, like, we are living in a time where we've got massive inflation right now. It will end up in a hyperinflation. If you go back and look through every currency that's existed in the last 2,000 years, there's been like 10,000 different currencies. They've all died. Average is about 27 years they've survived for. They've all died of a hyperinflationary recession or depression. So if you go and look at Venezuela, you go look at Turkish lira at the moment, like, Turkey's a good place, apparently. I've never been there. It was perfectly fine. Venezuela was a very rich and wealthy place beforehand. Their currencies collapsed and crashed, right? And you can see that what we're seeing with the levels of debt, the manipulation of the bonds that are being out there, the bigger the Ponzi scheme that's being created, the less that they can keep control of that. So if we look at inflation, there's no way for them to be able to control that, right? There's no way, because people are starting to realize, I don't want the money. I want the asset. I want the physical piece of good. There's no point having a piece of plastic or paper with a dead criminal printed on it, being the Queen or whatever sort of political figure it is. Who wants a piece of paper with a dead criminal printed on it? Not me. I'd rather have a bottle of water to go and hydrate my body. I'd rather have the car to go and drive myself around. And as people start losing their trust in the value of that currency, well, then we're going to start seeing high levels of inflation. As we start seeing high levels of inflation, we will end into hyperinflation, and people cannot afford to have their life as it is. So if the other thing I was thinking about as well for this slide is, when we go into hyperinflation, when have you ever seen the price of something come back down, right? You don't see, orange juice is now 40 cents again, like it used to be in the 90s. It doesn't go back that way, because the money is getting bigger and bigger and blown out of proportion, greater and greater. So if you think about it, we've now got higher costs of food, we've got higher price of commodities. We're looking at those charts at the start. We've got commodity prices, fuel, gas, coal, right? These are all things that are needed, right? But the real controlling powers do not want to pull these minerals out of the ground and hand them over, because they don't trust the currency, which is causing the prices of the real materials to go up. That's why we've got energy crisis. That's why we've got petrol crises. And then when the petrol comes in, you see the big Linfox truck come through. Linfox would have a big problem right now. I'm just assuming that they would need to buy new trucks, but with the trucks that they've bought, their interest rate has gone up, right? So the cost of their funding has gone up. The wage has come in. The person's like, they're driving the truck's like, mate, I can't work for 80 grand a year. I need 120 grand a year because my kids' school fees gone up, my interest rate's gone up, my food's gone up, whatever. Oh, we can't pay you that. The guy gets out of his truck and says, well, fuck you. I'm not going to go and work for this, and steps off. And he goes, no, you have to come back, hop in the truck, we'll give you your money. So he's got wages going up. We've got the interest going up. We've got the commodities to run these things going up. when they go to the depot, they go pick up frozen goods. The fridge has been running on electricity, which the coal has gone up, so then everything's going up. This is a very hard thing to tame. If it turns into a recession and we start seeing negative GDP, the whole system implodes, right? And I don't talk about explode, because exploding would be good, but imploding, which means the whole system falls back down on itself, like those Twin Towers did back in 2001. They just, like a controlled demolition. So looking at the inflation levels, we are now seeing everything just keep rising and rising and rising. When you've got a family that, if they're on $1 million mortgage, right, an average family, right, you guys think you're stressed? You might be, right? It may get worse, right? Someone's asked me, when will the interest rate stop going up? I don't think that the system can support the interest rates at the current level that they're at, but the interest rates will stop going up when things start imploding on themselves, like I was just saying. So this will start happening over the next few months. We've had 4 months of it. It's pretty harsh, like the largest interest rates that have occurred, especially coming down from a point where there was no cost to the interest beforehand. The interest was pretty much nothing. It was free money. So as it goes up, there's a lot of people that are going to be losing business. People won't be going out to eat, so then the food shop will get into trouble. They'll close down. They'll cut the hours. People are going to be losing jobs. They're going to be losing hours. And these are things that are going to affect the greater part of the economy. So it's a very interesting time. It's a convergence, right? And they're going to have to turn those money printers on quite soon, right? I reckon 12 months, but no financial advice. Matt said here, for my work, I do commercial factories. The other month, talking to a manager after I finished, he showed me the company electricity bill, 30K. Previous month was 80K. The next month, previous month was 30K. The next month was 80K, and they were on a set bill rate. Exactly. So the cost of everything is going up. So that is causing higher levels of inflation, right? And as we start seeing this spiral up, they're going to have to print money and basically drop it out of helicopters like they've just done. But if they don't do anything, it will cause a hyperinflation now. They're kicking the can down the road. They're trying to message something, go, you'll see that, what's his name, Philip Lowe or whatever his name is, he'll come out in 6 months' time and go, oh, well, we're in a recession. It was Putin's fault. And China, they did something bad, and we had to react because of China and Putin and all this sort of shit. And they make up these stories. Everyone go, oh yeah, fuck, China's bad and Putin, let's go bash a Russian, or whatever the case is. People will get, negative on it. It's happened, right? It's a brainwashing, right? I think back to a younger version of myself. I was brainwashed. I remember back in 2000, early 2000s, everyone hated, certain races of people and stuff like that. All my friends are those races now, right? They're really, really good people, but the media told you that they're bad and certain things are really bad. So when you look back, right, and you see these things, it's like you see too many coincidences that are happening. So Matt just said here, the USA are the real criminals. The real criminals are greater. The USA are just bitches. They are just a puppet. They have been, China is the new USA, right? And people go, oh, China's so bad. It's like, China was set up, right? China, if they came to a really lovely economy, right, and they said, which the USA would have been at the time, which was the pumping economy, because they're producing, right? They're actually making stuff, right? Not living on a Ponzi scheme and not living off a credit card, which is what's happened to that economy now. If they went there and said, we're going to give you, communism wrapped up in a new system, they would have been, get out of here. We're going to, keep doing our thing. You can get stuff. So they've gone to China and installed the real system that's a new system, right? And it's taken a couple of decades to evolve. And here we are with a strong superpower that has been set up. But my question isn't who China is or who US is or anything like that. I want to know who's the ones that's shaking the hands of these people. Who are the ones that are calling the shots? Exactly. So, so looking at deflation, if we go back to the other charts, that I don't have them here on the screen at the moment, you'll see that the M3, I'm just going to go back. So just bear with me for 2 seconds, guys. I'm just going to share with you something that that's here, right? So if we look here at the bonds, right? if we add all these bonds together, right, we would see that we had a crash around 2000, right? We saw the bonds going backwards, but the non-government bonds picked up the slack, right? So if we added all of these things together, how high would this have gone? Tell me here, right? These are bonds that are being created, right? You never see them go backwards. There's just always more and more. They never pay them off, right? Just get that for a moment, right? So these bonds, which is the money that's being created, is never reduced, right? So if we go back and pretend that these are not bonds and we say the credit card limit just keeps going up and everyone feels like they're richer, right? But we're now at a point where the credit card just can't have $10 thrown in and you go buy yourself monthly grocery. You need $1 trillion put in there to go and get yourself petrol in your car. That's where we are heading with these charts. And that's where the data lays. So I'm just going to go back to here. So you won't see the M3 money supply get wiped off. It doesn't get deleted. So, and just finally, on this point, the reason why we're going to a hyperinflationary depression, and that's to come, it hasn't arrived yet, right? I'm talking about things that are 2 steps ahead here. So people will be, I'm sure I have smart asses that'll be like, oh, Nathan, but you said the interest rates are going to go backwards, right? And then we look at this, right? Where we are here. I remember seeing it here beforehand. The real cash rate, if this wasn't fake and they're trying to destroy this here all was in sync, right? These interest rates, the real cash rate is negative interest rate right at the moment, right? Right at the moment. That is not something I've made up. It says here from the ABS and all these other shit. But this came from the RBA website that I pulled off the website. So this here is in the opposite direction to where that's going. How long can they pull that trick for? Who knows, right? But the whole system will crash. The whole system. It's the only time ever that it is separated in the last 30 years or whatever. Just be mindful of it. Where are we here? Yeah. Interesting times, guys. Interesting times. I'm excited by it because I see the opportunities that are out there, right? I see opportunities that are out there. So I'm out of water. Got a little bit of water left here. So how can you protect yourself against the global financial depression, right? I'm not saying there will be a depression. There'll be 1 or 2 things that will happen. There'll be a depression, which is caused from deflation. We ain't going to see just go, oh yeah, life's going to get back to normal, right? We're either going to see massive deflation, which wipes out everything, right? If you think losing something's bad at that point, go to a 3rd world country, that's where it would end up at, right? And it could very quickly happen there, right? If there's no power plants, what would happen if there's no power going to your city? Let's say I'm in Sydney here. What would happen if there's no power? That means that the sewer treatment plants can't run. That means the water would flow out, the sewer would flow out in the streets, and within 2 weeks, everyone would be sick with diseases and dying on the streets, right? And I don't mean to be really negative, right? But I'm just trying to paint a picture here. It'd be like a Stephen King movie. So if we had a deflation and then power companies went broke and all these things happened, then we would see bad things happen, right? That we could never even imagine, right? We'd have to watch a movie to see something like it, right? Like an end of the world movie. That's what would happen if we had deflation. So the global financial depression will be based on that, or we would see, and the reason why I say it's global is because if we go back to all those charts, all of our currencies are tied together. It's the same shit. There's no difference. The whoever's in China, whoever's in bloody Russia, whoever's in US, whoever's in Australia, whoever's in the UK, they're all controlled via the same puppet master, right? And I have a belief of where they are, and I could be deemed as insensitive to say certain things about this race of people that control, right? But there is a controlling power that controls all these entities, which won't go into. But looking at the whole thing would destroy, right? There's no difference. It's all connected. The whole world is connected. We're in the global economy. Our currency is all connected. And one thing's going to happen. It's either going to be a massive depression or we're going to see massive hyperinflation. The hyperinflation will still lead to a depression, but there's certain things that you can do to go and protect yourself. So if we were going to see depression, we know that that's maybe a 2% likelihood. I want to say depression, not a hyperinflationary one. Hyperinflation or deflation or inflation, right? So if we see depression based on deflation, end of the world as we know it. 2% chance of it happening. The other 98% is that they will just print their way through this like they have through all those charts, right? If they print their way through this, that's going to cause hyperinflation. Hyperinflation, go and research what happens in every country, right? In Venezuela, they broke into the zoo and stole the animals and ate them, right? These stories are out there. They're published by the local media and the mainstream media and all that sort of stuff. It's not like I'm making this shit up. What are things that you can capitalize on? What are the things that you can do to protect yourself? What are the things to watch out for? Have your own mind, look at your own data, educate yourself, research what other countries have done during a hyperinflation. Who were the winners out of a hyperinflation, right? Go and research this stuff. It's out there. I'm not here to hold your hand and tell you everything, but I'm here to guide you and nurture you. And if you can benefit from it and, you know, we can do business at some point in life, then happy days, we all win. But if not, just go out there, research yourself, or do nothing. Just like put your head on the rock and go, oh yeah, this sounds stupid. Nathan's, you know, smoked a bong before he did a webinar, and tell yourself whatever about it. Or it all sounds too hard and it sounds too depressing and I don't want to think about it, and bury your head in the sand. But there is real wealth that's created, and it's a transfer of wealth from weak hands and it goes into strong hands. It's understanding how, you know, these things happen, and it's finding the opportunities within it. And that is why I'm the most happiest motherfucker that you will see by watching this, explaining it. It sounds miserable, but there's lots of, you know, benefits to it and lots of positive things that come from it. So in a hyperinflation, people go, oh, what about a house? You know, it's good. And I talk about property, B.Invested, buyer's agency, have all these different things. Having property would be good, but what happens if someone can't pay their rent? We're not at a point yet where people can't afford their rent. Their wages will get pushed up, everything will get pushed up. They'll print more stimulus packages. Everyone will be on a universal basic income, free money for all that sort of stuff. But there will be a point where it just blows off and no one's going to be protected. But having cash flow is very crucial. Cash flow, right? Flowing in from multiple streams of income. And I'm not saying just go buy some property and call me up and get 10 properties. I'm saying multiple streams. So do you have a business that you're running? Do you have a side gig? Do you have investments? Do you have property? Do you have crypto? Do you have whatever? You know, I'm not spruiking going to get any of these things, right? But think about having multiple streams of income, because in the last 2 years, you were forced to perform tricks to keep your job, right? You were forced to modify your body to keep your job. You were forced out of your job. You've been there for 20 years. Sorry, not allowed to have a job anymore. Next minute, the business is still operating. They've got their job keeper, and you go get a new job. Everyone can't afford a staffing because the wages keep going up, right? You're not in control of your life on that front. So you want to take control of your financials, because if you remove the financial need, then you're not at servitude to the employer or to the job or to whatever it may be. So you don't want to be selling your time for money, and you don't want to have just one stream of income. What happens if no one pays rent? You want to have a supplement income. Do you want to, you know, whatever. So have multiple streams of income, have a good cash flow. That cash flow should be increased with inflation. So the more inflation that occurs, the more your cash flow goes up, so you can be indexed with that high levels of inflation. Do factor in if your business has someone just said they can't hear me. If you can just let me know, everyone, if you can hear me or not. I haven't had anyone else say that, so hopefully it's not just you, David. But at the same time, no one's writing here saying, Nathan, I can hear you. Okay, you can hear me, cool. So yeah, make sure that you have multiple streams of cash flow coming through. I do think about some of my businesses, and I've got some really random businesses, right? Like yesterday, I settled on a resort, right? On a really cool resort in Port Douglas, actually. So I've got a resort in Port Douglas now, and in that I've got a restaurant and I've got a dive school. So I can't even fucking swim, and I own a dive school, right? I own a Chinese restaurant and pubs and pokies and keno and all different things out there. So it's pretty funny. But I look at some of these businesses and I'm like, fuck, imagine if people can't afford to pay for beer. What happens with, I've got Chinese restaurants, I'm selling spring rolls and fucking dim sims and curry prawns and rice, whatever goes out in a Chinese restaurant. And it's really just, it's a test of something, and it was there, I inherited it, and it's profitable. But I think to myself, what happens if the staff wages go up too high? What happens if the cost of goods for the food goes up too high? What happens if I can't afford lettuce and I can only afford cabbage? What happens in all these situations? So looking at that world, you need to look at your cash flow streams and see what are the risks that are surrounding your cash flow. Will they be increased via hyperinflation? Could there be situations where you might, be in trouble for your business if it's covered by that? Where you could be in trouble could be where you have employees, where you have stock, where you have the availability of the stock. If you've got no stock, then you can't sell anything, all those sorts of things. Thanks, Lisa, for the congratulations on the resort. It was a big one, and it was a battle getting over the line. So I had a vendor that didn't want to complete on the deal because they're like, shit, I sold this thing too cheap and I don't like Nathan's terms. And I had a bank holiday the day it was meant to settle, so that gave him an opportunity to get out, and we're able to final 11th hour be able to buy an extra 12 hours to settle the property because we couldn't get all the funds from the lawyer's trust account into their hands. So always a struggle, always a hustle, always a part of the journey. I think another way to protect yourself is to understand what is fake and what is not, right? All the people that are reading to you on the news, I know I've been on the news over 100 times. I don't go on there anymore because I can't. It's beneath my dignity to be able to be a part of that sort of system. That's why I talk out weird stuff, because I just see it. All those people that are, oh, welcome to the Today Show, welcome to the Sunrise, welcome to whatever, right? They're reading a fucking teleprompter. It's a script. They don't come up with it. They're not thinking about it. They're not sitting and going, oh, yeah, this is what it is. This is the data, whatever. They are an actor, right? And they're acting. So understand, where is it coming from? Is it being regurgitated, or is it news that you have been able to pull data from and go, okay, I can make an educated decision from this? Because you need a free mind to be able to create your future, right? And not regurgitate. I can tell when having a conversation with someone the level of intellect of where their brainwashing is, right? And it's like, it's really bad for me nowadays. So I see it, and it's like, stop regurgitating shit, right? I call people out, have fun with it, right? But it's like, understand what in the world is fake. I'm not going to go too deep in it. I can say, look up at the sky, look at the clouds, look at the food, right? Those food that you eat at Macca's, right? Who has thousands of chips that are ate out of potatoes without a single blemish on them, right? All of these things. Look at what is fake out there. Understand where you're being lied to, right? The RBA guy that everyone's bowing down and obeying without questioning, like as if it's some god, right? There's lots of cool books out there that relate to God, right? Doesn't matter which religion you are referring to, there is lots of good books out there that refer to a God, right? And let me tell you, these fucking people are not a God, right? But people obey them and question without questioning, with blind faith. Yes, I better believe, I better do what the TV tells me to do. I better do what this actor does, telling me to go play with my body. I better go and do what this guy does. We're not going to have interest rates go up until 2024. Well, interest rates did go up at 2,000% at the RBA level in 4 months. 2018, 150%. The rate went up from 10 basis points as a cash rate to 1.85%. 185 over 10, right? That's 1,850%. Understand you're being lied to when you're being lied to. Have a plan to, protect yourself, to protect your family. Have a plan of how you can take control of your own little mini world, right? Make sure you've got, I just moved house recently and they had some chickens in their house, right? Not in their house, but they had a chicken house. So I said, can you leave the chickens? They sound like fun. They're like, oh, my pet chickens are crying, don't eat them on me. I'm like, oh, can't guarantee that, whatever, joking about it. But they were their pets. And I said, look, just leave the chickens behind. And I got the chickens thrown in on the deal, right? and every day go in there, feed them, here you go, here's your food, whatever. They're giving out like a couple of eggs per day, right? So if you have to go buy eggs and they end up at $20, and you've got a decision whether you put petrol in the car, you go to your job, or you're going to eat. Well, I know I've got chicken eggs there, right? I don't want to eat the chicken because I'm going to get rid of my asset then. The chicken's the asset, right? The eggs are the cash flow from it. So make sure you've got your own food source. Make sure you've got your own access to water. Make sure you've got access to electricity. Make sure you've got access to a property that isn't under the flight paths of aeroplanes out there that could drop bombs on you, hypothetically, right? It's important to have a plan, right, and have control of your own food supply, your own cash flow. You're not anybody's bitch. You don't want to be anybody's bitch in life, right? That's the reality. So how could you fall in the trap of that? Not having food, shelter, energy, water, means of communication. What happens if you can't have electricity? What happens if the internet goes down? How can you prepare for those sorts of things? These things come at a cost. There's no way that I could just go out and afford certain things in my life if I didn't take certain steps in order to get there. So I think it's important to have assets. That could be property. Property is my favorite go-to because I can get a loan attached to it. I can leverage up on that. I have cash flow that goes up with inflation. I have the capital value that goes up with inflation. I have the human energy that it takes to build a property that you can't rebuild because inflation's gone up too high. I like that, but also like having people ask me about crypto. People ask me about shares. People ask me about all different things, right? Gold, silver. And I think it's important to have access to all of these items, right? I'm not a big fan on shares. I don't have shares in the current market. I don't have any intention to go and get more shares, but I do have lots of other assets and lots of weird assets, right? Even down to a chicken. I'd class the 6 chickens as assets because they're giving me a cash flow, which is the eggs. In this period, important to have some cash, right? And I don't just mean cash in the bank either. I mean actual physical cash, because what happens if there's a bank that goes down? We've just seen in China that that there's tanks sitting out the front of the bank because people are protesting because they want their money, right? If you don't have access to your money, how are you going to buy shit? How are you going to barter? What happens if someone goes, well, we don't want your digital commie currency or your digital social credit system or your central bank digital currency that you're trying to force upon me. I only want to have cash. So it's important to have some of that, but I'm not a big fan of cash because you're buying less and less with your money every single day of the week. I think it's important to understand how debt works, which I've hopefully explained a fair bit tonight and in a lot of other presentations that I do. Understand that debt is good. You can be too over leveraged, so don't be too under-leveraged, but don't be too over leveraged. You need to get the right balance of cash flow and income and making sure you've got enough equity and the assets are doing the right thing. So understand how debt works. Understand that money is debt. It's all being created. Those bonds are your money, right? The more bonds that get created, the more money that's out there sloshing away. If that comes down, then there's less money out there. All the debt was created. All the money was created with debt. It's all debt. So you can create your own debt, which is creating your own money, which gives you your own control. So the more currency that, or the more money that you can create, the more debt you can create, the more money that you're making, then the more assets and more things that you can do. So understand how it is and use it wisely. If you need help on that, you can reach out to my team and we can help you. Understand how inflation works, understand how deflation works, understand where all these little movers move with the banks. Go and research their chart packs. They come out every month, every quarter. Go and research and look at what direction these things are going in, and you can start drawing pictures as to, fuck, okay, that's where things are going. You know when you're being lied to. I know when we're getting lied to. I know when it's just blatant bullshit. And that's why I make these videos that are comical and got a lot of character to them, right? And yeah, I guess not being too over leveraged, not being too under leveraged. If you don't have enough assets, if we see deflation occur and you are too over leveraged, you can get wiped out, right? And a lot of people will get wiped out now. My excitement is in people that will get into trouble because it's natural that's happening, and hopefully none of you guys do. And I don't want to hear from any of you guys They're like, Nathan, I fucked up. This is what happened, 1, 2, 3. But there will be people that will be in trouble, and that's the opportunity to go out and do deals with those people and be able to grow your wealth on it, right? Anyone that wants to sell a property, I find it silly, because I'm like, why would you want to sell a property for some useless cash, right? I don't care how shit it is. I'd rather have the asset than having some trashy cash. So yeah, don't be too over leveraged, don't be too under leveraged. Make sure you've got the cash flow, make sure you get the assets, make sure that you've got yourself, your family, your whole life in order to be able to, live life on your terms of how you wish to be. As my logo says, live life, where is it here? Where's my mouse pointer? Be invested, live life on your terms. It started off as tell your boss where to go, but it's become a lot more than that over the years. And I think it's really, really relevant, more than any other time in history, to have control over your life and not be pushed in the corner. So, know what you're probably thinking, Nathan, tell me some predictions, tell me what you think's going to happen, entertain me, read me a bedtime story. I've been here listening to you for 2 hours now. What do you think's going to happen? So I've got here sort of some little notes and some little things that I see happening over the next 12 months, 24 months, 36 months and whatnot. So in the immediate future, I see that there's a lot of business pain out there. I see that a lot of things will crash, whether it be crypto markets, whether it be commodity markets, whether it could be property markets, right? If no one has access to money, then those properties have no value, right? It's only got the value that people can go and put to. So there will be, the difference between a property market and a share market is that in a paper market that's full of liquidity, you can liquidate something straight away and you can see the fall in the price pretty much immediately. Being in the property market, it does take 3 months, 6 months, 9 months, 12 months for those stats to fall through. So it's not just imminent. Go back to 2020. In February, March, April, May, June, July, people were so scared. And I made videos saying, this is like a big fire in the hall, right? If you guys remember my thing, it's like, there's a fire coming through right now. Most people, let's say there's 500 people in the room, they might have 50 of them just sitting there scared and go, oh, crying and shit, right? Well, then they're going to get burnt, right? Then you get the other 400 of them, 440 of them, running towards the door trying to get an exit, right? Then you've got the other 10 or so, 9 people that want to be a hero, and they're like, oh, we're going to get the fire extinguisher, put this thing out, whatever, good luck to them, right? Bravo. But then you've got someone like myself that'd be sitting there like, fuck, this fire, when the fire brigade get here, it's going to take 4 hours tops to put out this fire. If I go and sit in the fire stairwell, right, for 4 hours, I know that the wall won't burn within 4 hours. So I can make a run to the back corner of the room where there is no doors and there's nothing there, but it's, protected, whatever. Okay, so I'm going to be fine for 4 hours. I'm confident on the fact that we're going to get it sorted in that period of time. I'm going to go around and pick up everyone's wallets, rings, watches, handbags, mobile phones, whatever's on the floor. That's the opportunity that's happening. People are in so much panic, they will run towards all of these, exits, but they're going to get trampled on the way out. In the meanwhile, you walk out 4 hours later, firemen's come along, 20 people survive, 480 of them are no longer to be. You've got all their wallets, rings, and watches, whatever. You walk out and you say, here you go, look at this. Got a cash converters here. Who wants to buy something? I'd say that comically, but the reality is that we've got markets where people are running to doors, people are running for exits, people are scared, they don't know what's going on, they don't have a solid plan, they're not sure of what they're doing, and they haven't calculated the decisions because they know when things are going to happen. Understand that all these digits are moving parts, they're leaving clues behind. So that's the opportunity. I guess in the short distance, we'll see crashes, we'll see that costs of things will rise a lot. We'll see a lot more inflation in the short term. I think we'll start seeing high liquidations. We've seen, liquidations which have liquidated people in crypto markets. We'll start seeing margin calls happening in stock markets. I think as we start seeing higher costs and a recession kicking in, like we look at Metricon, for example, right? Every day there's an article out about Metricon saying that they've sacked some staff, they're going to go bankrupt, whatever. That's a self-fulfilling prophecy, right? Because if they're putting out these articles, people are not going to Metricon to do some deals with them, and you know, people aren't doing deals with them because they're scared of them, means that there's not money coming in, so they have to let staff go, and that the cash flow goes down, and it's just a downward spiral for them. But then you look at all those people that are going to be losing their job, and there'll be high unemployment, high redundancies, there'll be liquidations in businesses that are out there, but that leaves opportunities as well, right? That's the opportunities that are out there. But I do believe that it will be short-lived, because they'll have to come through with the fire hose and hose everything down, spitting out, stimmy checks and cheap liquidity for everybody. So that's what I expect to see in the next 12 months' time. Over the next 12 months, over the next 24 months, I predict, and this is no financial advice, of course, this is just my predictions and my weird shit that I'm telling you guys. I see a return of very cheap and easy credit, like we've seen for the last couple of years. Maybe it'll even become easier. They'll be forcing loans to people, no income, no job, ninja loans, like back in the GFC. Get a loan, be happy, go away. I think return of stimulus packages, building grants and all those sort of things will come in, because it's going to put a pent-up demand. If we go for a year with no building, right, and we're seeing very low levels of building coming through now, like low levels of building. If we go through, like, when I say low levels, I mean that there's builders out there that they might have sold 30 to 50 houses per month beforehand. They haven't sold a house to be built for 2 months, so it's pretty bad out there. So if we don't see these builds going through, that's going to put a pent-up demand. We need more migrants coming into the country to be paying taxes and committing to society and becoming a new tax slave citizen into the matrix, and they need somewhere to live. So we've got all this demand that's being put in, but the pent-up is not there. So it'll be good in the long term, basically. But we'll see stimulus packages for that. I think we'll see a lot more government spending over that period of time. New packages of welfare, probably some money around some commie stuff, government spending, new parks, new schools, new roads, all that. So your neighborhood might be made prettier. We've got to get all those unemployed people that used to work for the building company to go and pour concrete for the new bridge, right? So the concrete company doesn't go bankrupt, but they're building more bonds and more debt. Going back to those previous charts that you'd see that the government spending would be contributing larger parts to the GDP. Looking at the last common thing that I see happening is a lot of money being pumped into green energy stuff, and that could be into security, health, greenness. Just seen a message here, biometric robots everywhere, right? Every shop you go to, there's new glossy cameras. There's actually a grant, right? I'll tell you this, right? This is how bad things are. As a business, you can get a grant for $5,000 to install new cameras into your business, right? The business could be anything, could be the motels, could be restaurants, could be whatever. You get $5,000 given to you, but there's one condition. You must connect the CCTV for protection to the police grid. Just think about that for a second, right? The police are now watching your place of business. But one other step is that you cannot buy any CCTV cameras at all on the market. They all have audio to them now. Whilst you're not allowed to record the audio, it is there and it's present. And who knows what people do when they're recording things, you can hear stuff. So I know in my houses and all that, when I say houses, like I put in all my little houses in that I own for myself, like my houses that I live in and the houses that I have as my holiday houses. Like I look at my phone, I'm like, shit, someone driving past my houses, what's going on here? And I look at it and I can hear the stuff that's out there. So it records it, it saves it. You can't use it in a court of law, but these grants that are out there are connecting you into these smart grids without your permission. So how many times do you walk through the shops? How many times do you drive down the street and you are getting your images taken, it's being put in a database that you've never signed up for? You're just a part of this, interesting system that's the test of Big Brother that's being created right now. So Anyway, moving forward, there's an interesting picture there of a chessboard and, you know, certain colors and certain things that are sitting on the board there. So thanks a lot for putting that in, Carolyn, from the crowd, the slides this afternoon. It's funny. What do I see happening in the next 3 to 7 years from now? So a lot of people need to be looking at the bigger term picture, right? Most people are looking at now and going, oh, interest rates are going to go up. Well, interest rates do go up, and you know, it isn't good like that they go up, but it is good, right? Because that's putting pressure on, that's shaking the tree. There is a lot of benefits from negativity that is out there. So why do I like interest? This is like a slide I'm going to create that's not even here. Why do I like interest rates going up? Interest rates take away all the other people in the market, right? They're like making people fearful. It means that when I'm playing the chess game and I'm moving things along on the board, I can outsmart the board because they think I'm going to go this way and I go this way. And I use that information to be able to go and negotiate and get the things that I want, my terms and, you know, my logo. You know, live life on my terms. When I'm negotiating, I want my terms. I want things done. So it is good, right? People will be scared. People will be doing stupid things, whatever. That's the opportunity that's out there. But is it long term? Is 12 months, 2 years long term? That's just a short glitch in your portfolio. If you're trying to build wealth, this is intergenerational wealth. You're thinking 50, 100 years down the track for your kids, your grandkids, your great grandkids. Why are you worried about what's going to happen in the next 6 months, right? What's going to happen in the next 12 months? You want to be looking bigger and further abroad than that. So what I see happening over the next 3 years, 7 years from now, I see on the other side of this, maybe like 2023, 2024, we'll be heading into the hyperinflation and our currency will go. So massive inflation that we'll see. What that will mean that your cash flows will go up, your rents will go up, your buildings to build will go up in value. It'll cost you more to build, which will drag up the rest of the market. Massive inflation, hyperinflation will occur. Everything will rise. Doesn't matter if it's your cheeseburger, your packet of eggs, your block of cheese, your bottle of sparkling water, whatever it is, will be going up in value. So, or your electricity, you hold your fridge, you hold your food, your petrol for your car to go up, your car, you know, those sorts of things. So, I think that we'll see the currency completely get obliterated at some point, probably at the later part of this decade. And I think that will be installed with a commie social credit system, central bank digital currency style digit that we may even see the banks disappear out of this, right? And the banks are really, one other thing as well that I've forgotten to talk about for a very long time is I believe that we will see the central banks get to a point where they have to bail out the banks, right? But then we'll need to see the central bank get bailed out by something like the IMF being bailed out using a thing called a special drawing rights or an SDR. Let's just go to a bank for a second, right? I'm going way off track here, but just bear with me. It's going to be very important to draw the picture. So if we have a bank and let's say it has $1 billion of revenue per year, right? And let's assume, let's take out lots of equations, right? Let's take out the fact that if someone doesn't pay their mortgage or does pay their mortgage, right? Doesn't matter, right? If the bank made $1 billion and it needs to pay for all its staff, its overheads, provide for its shareholders, whatever, right? It would need to make more money next year. So it would need to print more loans. But if no one's taking on more loans and they're not increasing the size of their balance sheet, they don't have the assets on their book. So then their business turns to shit. So the bank goes bust, right? So just understand the expansion of the bank's balance sheet is detrimental in the expansion of the stock market and all these types of paper assets. But if the bank's only doing $1 billion and it doesn't go to $2 billion or $1.5 billion or 1.2 or even $1.1 billion, everything's going to start getting a bit shaky here. That's without saying that people aren't paying the mortgages, loans are defaulting, the banks losing the loans because they're getting sold at a cheaper rate, and we've got deflation, right? That's where deflation really comes in and kicks everyone and kills everything, right? So it's going to be very, very exciting. I'd love nothing more to see deflation occur, even if I got wiped out, which would be very difficult. But if I did have anything, I'd rather see that all the assets go down because I can go pick up more shit cheap. That'd be great. So yeah, just my 2 cents on it. The I feel that we would lose our paper currency. There will be no such thing as a dollar in its existence like it is now, to be all these OSCOs and very quickly transferred payments. You can tap your phone, pay and go, tap and go, pay ID, whatever the case may be. I think we're going to see a lot of chaos over the years to come. Things have gotten crazy already, but this is like stage one of a very big, transition to occur. Just like Caitlyn Jenner, it's a big transition. It's not going to be overnight, but it will be. You can see the changes occurring in front of us. So, and it doesn't mean it's good or bad. It's depends where you're looking at it from, and for a lot of people, it will be bad. I think that as we go into hyperinflation, we will see famine. As I said, you go to places like Venezuela, you look up all these hyperinflations, the news that's happened over the years. They're going to zoos and eating fucking animals, right? Who wants to eat a zebra, right? Who wants to eat a rhino, right? But these people are so hungry, so destitute. They're eating fucking chimpanzees, monkeys, and whatever else they're eating at the zoo. So, as the point that society is pushed to that level, right? They're now saying, oh, it's good to eat cockroach milk and it's important to have fake meats. This is to control, suppress. I'm going to eat fucking meat. I'm going to tell you that, right? I'm not a carnivore, but I'm just not going to be controlled with an animal, or not even an animal, like a bioorganism, like some sort of organism that's called a chicken, which is full of just chemicals and some little gene of something. Well, that's not what I want to eat as that. I want to eat a proper piece of old school meat. I want to go back to the old days. I want to be eating that stuff. So, people will have chaos. People will lose faith in their government. It started to happen. But it will ramp up a lot in the next, sort of the rest part of this decade. So that's just some views that I see. I guess the opportunity, the good side of things, keep all the questions coming in through. I've seen a few of them here. I'm going to answer them in a moment for you. The opportunity is to make sure you have a plan, educate yourself, don't obey without questioning, right? Have a question, like just be open-minded and look at things and look at it from every perspective. It's not always one-sided. What I say might sound extreme to some people, might sound pretty basic to other people. There's gray areas in the middle. Look at all different objectives and all different perspectives of it, and vantage points, and make a decision based upon that. And I guess you can have a plan, you can have a strategy, action it, right? And there's so many people that will be sitting here today in 2022 going, oh yeah, I'm just waiting for the property market to fall. People were waiting for the property market to fall in February 2020, February 2020, March 2020, April 2020, and then it never came. They thought it was going to fall, but it went up because they've changed the levers, they've pulled the levers. Those slides that I showed you at the start tonight, very important slides to look over. Understand how it all works and question, what is the agenda? If they push this button, what happens over here? And all I'm trying to do with you guys is share with you what I'm seeing from the buttons that are being pushed, what the possible outcomes could be from that, and what they will not be from doing that, and what would they need to push to avoid the bad things from occurring. And it paints a very cool picture. So on that note, if you do need help with building a portfolio, getting a strategy, working out whether you should change your super fund up, whether you should sell stuff or buy stuff or refinance stuff, or whatever it is that you need to do, reach out to my team. Very skilled at what they do. They see this stuff every day, and they'll point you in the right direction. So all it is a phone call, a chat, an email. Flick us an email, and we're here to help. Thanks a lot for tuning in, everyone. I'm going to go through your questions, and we'll go from there. So interesting in the US, Fed funds rate increased and done its job to trigger a recession, even though they're lying and trying to change the definition. Now 10-year yield is already dropping, as has the 30-year mortgage rates. Exactly. So we're seeing in these markets, so in the US, there's technically in a recession at the moment, but the Fed, which is the RBA of the US, have come out and said, well, a recession is based on this. And it's like a recession has always been X, Y, Z. Now you're saying it's something else, right? It's like a transsexual, right? It's like you were a boy, but now you're saying you're a girl. Now you've got to, you know, and sometimes I go, I'm politically correct, but you're saying that it's not a recession, right? What is it if it's not a recession? It's a recession, right? Anyway, I digress, but what we're seeing is that the 10-year bonds are going down, and those bonds, the bond rates, which are based on what interest rates are, they are now falling because it's triggered a recession. It's done its task, but it might take another 6 months, 12 months to kick in and see the rates drag down, and you know, interest rates go back to where they were or even lower and negative. So reptiles, yes. What have we got here? Nathan, when everything crashes due to the interest rates as a part of the plan, what happens at that point where those who have debt are not jabbed? What are your thoughts here? I don't know. I don't have my thoughts on it, right? I think they've done their job, and the agenda of, you know, everyone's done their duty and their pledge of allegiance, and it is what it is. So I don't think that what we're seeing financially, I think that when we have a social credit system, there'll be a digital wallet that is connected to your digital identity, which is showing your health sort of thing or whatever, and you'll probably get benefits from doing certain things. So if you participate in an experiment, then you get points. If you have enough green stuff in your thing, it's called ESG, which is environmental social governance, which that will be a part of something that's really big over the next, I was just going to try and flick the slide back, but when I talk about what do I see happening in the next 3 to 7 years, there'll be a thing called ESG, which is environmental social governance, which will be installed. If you do certain things, behave certain ways, you get, you know, little goodies for being a good boy. So that would be my thoughts. Okay. Carmen said, when do you think the interest rates will stop going up? I reckon we're almost at the end of the cycle. Everyone's saying 3%, 3.5%. I didn't think they could get past 0.5% before the system implodes, but they're going to bring a recession very quickly and have to change course of monetary policy. I think that we're almost there. I reckon there's probably only a 0.5% increase left. This is my view. Don't make any decisions based upon that. You asked me a question, I'm answering that. Just a little disclaimer for everyone watching. And if there's any commies from the government that watch this stuff, they can know that I'll put a little disclaimer on there. What do we got here? Apart from crypto, how would we avoid being financially controlled? We're being controlled because we're all believing in money, we're believing in certain things. So you could go crypto, you could have metals, you could have barterability, you want to have food, you want to have water supply. Imagine when someone says, hey, I've got no food, imagine the power that you'd have. You don't want to be borrowing or asking for favors of the toughest guy on the block. You want to be the toughest guy on the block. So having access to those things are very, very important. We don't know what's going to come next. No one would have seen half the stuff that's come in the last 2 years, so who knows what will come in the next 2, 3, 5, 10 years. They're going to pull out lots of different stunts from this. So just my 2 cents and thoughts on that front. What else have we got here? What have we got here? Mel, why is it that some developing markets, the currency is denominated in millions and billions, such as Indonesia, Thailand, India, yet they are not considered hyperinflations? What's the difference versus Japan, Turkey, etc.? So Japan's very different because they print their own bonds and give it to themselves. That's why they're stuck with, you know, their really non-existent economy. But where hyperinflation occurs, such as like Venezuela and Turkey starting to enter into it, I wouldn't say Turkey's there yet, but you've got other countries that have been through it. They're just printing and taking bonds, and it's like having a big bender on a debt-fueled party. And those countries are the ones that just run out of control. They just have to keep printing and printing and printing, and they lose the value of their currency. But I think you're referring to a specific slide, which I don't have here, but I'll go back through it and we'll answer that a little bit later. We've got some more questions here. Which company is an example of buying non-government bonds? That's a good one. I wouldn't know. They don't share that one. Mel asked again, once hyperinflation happens, how does the reset occur currency, money-wise? Would they create a brand new digital currency and we could convert today's fiat cash with the new currency, or today's fiat is completely worthless and everything resets from zero with that new digital currency? What happens to that debt? I think that it would be a bit like 1966, where they went from the pounds and the pence to the dollars and the cents, and they said that, you know, 2 bob is 20 cents, or whatever the case was. I don't know the conversion of it exactly because I wasn't alive then, but I think that we would see a value where the okay, you can swap these dollars for that dollars, but who wants to own the dollars? There'd be the point where I think everybody should be concerned and worried about a reset of the currency is where you have debt and you would want to pay the debt off before it goes into the new currency. So the debt would need to be paid off, and it would be like a debt jubilee. There is a point, and I'd be very open about that before it occurs as to when I'm paying off debt. So if I say I'm paying off debt, you'd probably want to start paying off debt. But at the point where a Big Mac meal would cost the price of your mortgage, that's sort of, maybe not to that extent, but that's sort of level of where I would expect to see. And that's happened to other countries before they go to stupid interest rates. So yeah. Is it worthwhile to undertake a major extension to one's main residence, principal place of residence in times of hyperinflation? Hard to predict how long the elevated labour and building material cost will go on for. It is better to spend the money now rather than waiting a few years down the track during high inflation. Look, if you're doing it later, the longer that you leave it, have you ever been through history and you go, wow, yeah, that tradie used to charge, you know, $1 million for a renovation. Now he's only going to charge me 50 grand for it. I don't see it happening. The cost of goods don't start coming down. I try and do my renos when I can, how I can, as soon as I can. So this is my view. I grow those chips, lol, a lot of chemical, exactly, right? I think you're referring to the lovely Macca's chips there. Carmen says, mate, I love your ways and style. Wish I knew the way to buy investments for our kids. Reach out to my team, reach out to the investor relations team, and let's see what we can do for you to be able to do that. Heard today that US government is going to give soldiers plant-based meat as real meat is getting too expensive. Exactly. Lots more chemicals, lots more control on what you eat and what's going into your body. The body shape of people are changing, and you think about what they're eating and how it is having an impact. And it's, you know, it's interesting. It's kind of a joke when you look at the level of food and what's going into soldiers, right? I see some of the things that they're putting out there, and it's like, imagine fighting the US and then seeing them with their logos and their fluoro rainbows. There's no offense to anyone on that rainbow, but you know, imagine you're trying to build, we're in a fucking dirty country apart, and the next minute's like, oh yeah, you know, it's interesting. During hyperinflation, if the government says you don't have to pay out your rent for a period of time, as they did during the scamdemic, will that put a lot of pressure on those who have debt? Do you have any thoughts or plans for this? They could, but during that period of time, everybody paid their rent still, and through Blink, like I'm property management business, and I have thousands of properties that I manage, and we had, I think it was maybe one that had a specific situation, but every other single person had paid their rent, and we actually put the rent up in a lot of instances. So yeah, it wasn't a bad thing. So, but they could, and there could be mortgage holidays and more stimulus packages around that as well. Talks of some of the stimulus packages that could come out, you know, rent support for people, the government, just like, think about childcare, right? If you have a kid in childcare now, I believe it's like 90% of the kids' placement gets covered from the government. So you're really getting incentivized. So what they've done is, if it's too expensive to live, so the mother of the house has to go out and get a job to pay for the bills in the house. So the mother takes the child and puts it into a government-backed indoctrination camp to babysit your child, while the mother goes out to do some work. She pays some taxes, she comes back, pays the bills, all that sort of stuff. But then the government is paying for the child to be at the childcare centre, which why didn't you just give the mother the money so she could stay at home with the child? But that would mean that the unemployment rate would be much higher. So just interesting things of how they manipulate numbers and the stats and the figures. And childcare wasn't really a thing 30 years ago. It had more and more pressure to do so. And now it's full blown, basically the government's paying you to take your kids away and look after them for you from, 6 weeks, 13 weeks old, or whatever the case may be. But what other things can they be doing? If that's childcare, what could they do in the form of paying 90% of someone's rent, or 50% of someone's rent? Those rental incentives may come up. So imagine if you get tenants, because I've got lots of tenants that do pay directly from the government, and it's like that's a great way of guaranteeing your income, is to get the government to pay the rent. So how many people will be on welfare rental payments to stop homelessness in the future because people can't afford to it? But if you've got the asset, then you're going to be getting that income from the government. If you don't have the asset, then you don't have the money coming from the government. So just an interesting perspective on it. And yeah, I'm excited to see more shit happen, just as I was 5 years ago when I said that we'd see the GFD, and then suddenly we had an illness which took the stage. Shit is going to come, right? Whether it's today, in 6 months, 12 months, 24 months, there's going to be a lot of blood out there, and there's going to be a lot of opportunity. And it's not just, the property market's going to crash or anything like that. There is opportunities out there. This little glitch that we're seeing might be 6 months, might be 12 months before we start seeing reverse in monetary policy, which is what we're seeing in other countries around the world. You go look at the US, they say, oh, we're not in a recession, but then you've got the bond rates falling, which the bond rates have a direct connection to the interest rates being charged from the central bank. So just my view on it, just my thoughts. On that note, guys, been here for about 2 hours. It's been great chatting. Thanks a lot for having me in your home on a Wednesday evening. And if you do need any help, reach out to my team, 1300-367-925. Send my team an email. If you have a super fund, make sure you go and protect it. Reach out to my team. They can put you in contact with someone. If you have finance that hasn't been structured correctly, make sure you do get it structured correctly, and do have a plan in place. Look forward to catching up with you next time, and keep being awesome. Bye for now.